NJCPA wins the World Cup of Societies. This is the Issues Watch podcast. Hello, and welcome to the Issues Watch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm the partner in charge of accounting and auditing with Sobelco. This episode qualifies for Nano CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. A quick disclaimer, the views and statements expressed herein are my own and not necessarily those of NJCPA or Sobelco. Okay, so we do have some information to kick off the year for you, but let's jump back to last year. The FASB came out with ASU 2022-05, 2022-05. It relates to insurance. It's transition for sold contracts. This allows for guidance for insurance entities to exclude long duration contracts, LDTI. Remember that for questions later. Long duration contracts, LDTI, by applying ASU 2018-12. If there's because you can exclude these liabilities if there's a sale and there's no future involvement. It's effective, consistent with updates for ASU 2020-11, which was SEC companies or public business entities, December 15, 22, for years beginning after December 15, 22, and all other years beginning after December 15, 2024. So why is this important? If you work with an insurance company, or if it's SEC related, you have to think about this next year. If it's not, you have a couple years, but still, if you work with an insurance company, you might want to look into these ASUs that I've referenced. Crypto assets. This one's going to take a little bit of a while. And I know you're probably getting tired of hearing me talk about crypto assets, but there's a lot in the news about it, and the FASB keeps focusing on it and talking about it, and I think it's important that you hear about it so that you know, because one day, someday, this is going to pop up either in your company or with one of your clients. So the FASB actually had a meeting to determine certain aspects. Now, if you haven't signed up for the FASB emails, their alerts as to their meetings, I recommend you go and sign up for them. They're really interesting. It's an email. If you don't want it, you can delete it. But you do get to hear some of the content, hear about their meetings, and just know what they're thinking about and working on. Also, the Journal of Accountancy had a good article on this, and what you'll find out a lot of times, the Journal of Accountancy gives recaps of their meetings and a lot of different things. So if you don't get the Journal of Accountancy, you might want to get your hands on that too. So if you don't mind, give me a second. I'm going to read off from their meeting what's required of crypto assets as relates to some accounting and disclosure. So the FASB decided for both public and private companies, at a minimum, present the aggregate amount of crypto assets separately from other intangible assets. Present gains and losses on crypto assets and net income, and present those gains and losses separately from income statement effects of other intangible assets, such as amortization or impairments. Classify crypto assets received, such as non-cash consideration during the ordinary course of business, that are converted nearly immediately into cash as operating cash flows. The FASB decided that investment companies should present their financial statements in accordance with Topic 946. I'm going to go on. I got a bunch more, so I apologize. The FASB affirmed, or the board affirmed, that disclosures should be following Topic 820, which is fair value measurements, as compared to what I thought would have fallen under 825, which also relates to fair value. But that's a big one, that it does fall under 820. Okay, the FASB decided to require an entity to disclose the following. So I've got 5 bullets here. At both annual and interim periods, the following information for each significant crypto asset holding: the name of the crypto asset, fair value, units held, and the cost basis. Annual interim periods, the fair value and cost basis of other crypto assets holding, which may be aggregated within a single line item. For annual periods, a reconciliation of activity between the beginning and ending of the period total crypto asset holdings, This disclosure would require that an entity disaggregate information by additions, dispositions, gains, and losses during the period. Annual periods for the disposition of crypto assets during the period, the difference between the sale price and the cost basis of those assets. And finally, at both interim and annual periods, a fair value of crypto assets that are restricted from sale, the nature and remaining duration of the restriction, and the circumstances that would cause the lapse in restrictions. Whew! You know I only have 10 minutes on this podcast, so I had to go through that quick. If you need information about it, feel free to reach out to me. Look it up online under the FASB or under Journal of Accountancy. Great information there. The AICPA also came out with a practice aid. Now, remember, I mentioned the practice aid that they had a while ago on digital assets. They came up with an updated practice aid for December 22. If you remember, I would try and get your hands on a copy of it. Look at it. It's around 90 pages long. There's a lot of information in there. I know a lot of people going, I don't have this. It doesn't affect us. It could, or it may one day. And you just want to be up on this and be able to be conversant in it. As you know, there was this whole FTX issue, and I'm wondering what the fallout of this is going to be. This is more editorial, but if you've been following this, it all relates to, or if not all, part of it relates to the whole digital assets, which we just covered over the past couple of minutes of why so many changes. Another issue that has been addressed and been talked about a lot, related party transactions. Remember, as part of your audit process, you have to understand all the related parties and the transactions, and make sure they're disclosed and reported properly, accounted for and reported properly. And the last thing that I want to bring up that it seems to be talked about a lot is the internal controls. Now, I'm not here pontificating on FTX itself. I'm talking more about making sure that you have a good documentation of the control environment. And if there are material weaknesses, significant deficiencies, you should be reporting them to those charged with governance in the AU 265 letter. Just some comments. I have an anticipation that AICPA is going to start focusing heavily, and maybe the PCAOB heavily, on those two areas as part of their peer reviews or their inspections. So it behoove us to get ahead of the curve on this. All right, AICPA, really no big update from them. I just wanted to bring up QMS, Quality Management Standards. Remember, they came out with the two standards. Then there's a SAS that relates to it, Statement on Auditing Standard, that relates to the adoption of the auditing standards as it referenced to the Quality Management Standards. And then the SARS came out with, the new SARS came out connecting the review standards or the accounting and review procedures to the Quality Management Standards. So these things have been talked about. It's been about a year now that these have been out, and a year is down. Now, I know that these are not effective to 2025, but this is a real long-term integration process. I strongly recommend that you look into this. The AICPA has had some trainings on these, and you might want to, I know that somebody in my office sat through 4 different sessions on it. Some other firms that I talked have actually appointed, some of the bigger firms have appointed somebody, I'm not talking Big Four, individuals that this is their function to get this into effect over the next couple of years. The AICPA does have a good roadmap on how you should, or how they recommend that you phase this in. It is going to be time consuming and is going to take a lot of effort. We all are waiting for the tools that come out. A lot of us use third-party practice aids. I have not seen the tools come out yet, either from the AICPA or those third-party companies. As when I see some, I'll make mention to it. Of course, we never give an endorsement for any particular product on this or other sessions that many people do for the society. Okay, last topic I want to go over. I wish my friend and co-presenter Frank was here, because he talked about this a while ago, and I'm sure he heard about this and he's very happy. The PCAOB gains complete access to audit firms in China. If you remember a while ago, Frank reported that the PCAOB pretty much said to the firms and companies in China, if you don't give us access to the firms, the firms and their audits, we're going to potentially, and the SEC said we're going to potentially restrict you from and delist you from trading. Now, I really summarized what the comment was that Frank made a while ago, but you understand the depth of what I'm saying. The good thing is that the PCAOB finally gained access. They gained access to work papers similar that they've had access in other jurisdictions. They've determined that they've satisfactorily gained access by selecting firms and engagements without consultation or input from China. They also viewed complete work papers and were able to retain information as needed. And finally, they had direct access to personnel associated with the audits inspected or investigated. So this is really big because now they're being held to a standard. The firms over there are being held to the standard that we in the United States have been held to a standard for almost 2 decades now, and have gone through inspection processes. So that's great to hear. I'm sure Frank is very excited about it. Let's go to our closing. I'd like to let you know about some upcoming NJCPA events. On January 12th, the Mercer chapter is holding an in-person compilations, review, and financial risk management session. And in February, there's a 3-hour webinar on ESG and the CPA's role in reporting, and attend on February 8th or 16th. I had to mention ESG at some point, you know that. Register for these events and more at njcpa.org/events. And do me and yourself a favor. Make it your New Year's resolution to be sure to join the NJCPA Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. Thank you for watching or listening.